I think this market has become much more of a gambling institution, and you see everybody lined up on one way. And then, being a contrarian and going against consensus has become much more, I think, profitable.
From Morgan Stanley, this is Hard Lessons, where iconic investors reveal the critical moments that have shaped who they are today. You'll hear about 2 out-of-consensus calls, one that was on the money and one that wasn't. Today on the show, Rick Rieder, BlackRock's Chief Investment Officer of Global Fixed Income, in conversation with Seth Carpenter, Morgan Stanley's Global Chief Economist and Head of Macro Research. At BlackRock, Rieder helps to oversee $2.7 trillion in assets under management across global bond and multi-asset markets. He's an influential voice on interest rates, inflation, and market structure, and chairman of BlackRock's firm-wide investment council.
It actually has been a while since you and I sat down and talked together.
Good to be here. Thanks for having me on it.
You've been at BlackRock now for 17 years?
17 years, yeah.
That's a long time.
Hard to believe. Hard to believe.
What's it been like, that journey at BlackRock?
I remember in 2009, I had a hedge fund, and all my partners were discussing, should we go to BlackRock or not? And I remember saying, this place, it could be the epicenter of finance, but not thinking that the firm would grow to the scale it did. We were right before the acquisition of BGI and iShares, and which has transformed part of the transformation of the ETF industry. And to think about, over 14 trillion in assets, and when I joined, we were a tiny fraction of that. And it's become like a pretty amazing place. So it's been fun.
You did say epicenter, which I think is a useful word, because how many billions of dollars of assets under management did you think you'd be able to talk about trillions of dollars of asset under management?
I chair the board of our charter schools in Newark, New Jersey, and I did enough to talk about how much we manage. And I said, does anybody know how many zeros in trillions? And then somebody gave the answer, and I really didn't know. And I had to I had to think about it and say, oh, hold on, I got to actually think about how many zeros. And it was actually a funny thing. But when you think about, the sheer scale of it, and it is pretty extraordinary. Certainly in the portfolios I run, we're like maniacal about precision in each of them. So it doesn't feel like untenable. It feels very manageable in terms of that scale.
$1 trillion, trillions of dollars, that's a lot. Do you think the sheer size of it is part of the secret to success? What is it that's the secret there?
There are some benefits that come alongside of it in terms of the amount of flow we see across different asset classes. Seeing thousands of situations, the odds statistically are just better. That we can look at so many different things and make, and by the way, not that I make all the right decisions or many of them, but it is the ability to actually look and say, okay, that makes sense, and see relative value in places that you wouldn't even think. Like being able to put the pieces together, it gives you an ability to actually try and build the puzzle effectively.
So I'm going to shift to try to draw wisdom out of you and dissect a little bit that process that you go through. When you think about your career, there are places where you have been out of consensus and it turned out you were right.
And maybe I'll start with describing, like when you say the wisdom, I actually don't think, like I don't even feel like I should be characterized as having wisdom, because I think everything is like you have to do immense amounts of work. And I don't think for me at least, there's no innate distinctive skill set. I just think you try and put all the pieces together and then have conviction about it. And some people are like, you're in it, you have conviction, and then you double down if people don't believe in it. Sure. I'm not very good at that. I think, though, what I've been able to do is look at things like technology. I am a huge geek in terms of technology. When a new technology comes out, I have to be the first in line. And every new technology that comes out, my wife laughs at me. I got to go to the store. I got to stand in line. I got to be with my peeps, and I got to learn what this is. And I just love tech. And I'll never forget when EV cars came out. And there was this, it's not going to work. The battery's too expensive. It can't compete. You have these huge players that are entrenched in gas-powered vehicles, and it can't work. And I remember doing all the work and looking at that it wasn't really an auto business. It was an energy business. So you think about, is it efficient? Can you create real scale around it? And I remember doing all the work. Like I remember sitting in rooms, and I was the only dope in the room. And you start to think, by the way, there are times I have no problem describing my conviction, But I'll tell you, just getting in early on these things, I remember first driving when it's like, oh my God, it's fast, it's clean, it's quiet. I'm like, this is a better product. And I do it with like everything. The same thing when I remember when the Mac first came out, and I remember when the AirPod came out, and like, this works, and this is just distinctive. But to me, it's like, okay, and then you understand what's the TAM of the market, what's the size of the market, how can you bring costs down over time, what's your cash flow on the backside of it.
So there's a really disciplined, humble process that you just described, but there's also a bit of a lonely process being sort of all by yourself sometimes, and everybody else saying that maybe you're crazy. What do you do in those moments?
So I would say 99% of the time, it's all about collaboration and team, because everybody tends to move with the consensus, myself included, most of the time, virtually all the time. And there's some people who are different, who maybe have your view that are also out of consensus, and you check yourself a lot with those people. And you say, okay, what are we missing? What do we have wrong? And then I like to read a lot of people with a different perspective. And like, why do they think this makes no sense or what have you? So I tend to go with people that are aligned on the view, and then the people who aren't really try and study it and then try and get confident. But like I say, I've learned over time that we're not in the business of being right. We're in the business of generating return for clients. And what happens is the market perception can stay wrong longer. And I remember studying, as you did in school, the efficient markets thesis. I actually think they should throw that out because that is so far from the truth. I think markets are wrong a ton, but you got to survive, and you could be out of capital by the time the markets get it in theory right. So anyway, I try and stay in it. I'm not very good at doubling down when people go against me, because your confidence goes. But I try and stay in what I have, and then try and develop the thought deeper, and like, this is going to work.
Oh, that's fascinating. It's funny. I think it was Keynes who was at least attributed for saying the market can stay irrational longer than you can stay liquid. Do you find it, and this is very self-serving as a sell-side analyst, but do you find it more helpful for you to read people who have sort of the same general view so you can corroborate what you're thinking, or is it more helpful to find people who disagree with you so you can pressure test and find out where you might be wrong?
I'd say the most sophisticated answer was to challenge yourself with the people who have a different view. And I just don't as much as I should. There are people who I respect and I trust, and I like to look at, whether they're right or wrong, I like to go with that. But a situation when you're very against consensus, and I try and read a lot about the people who are aligned on the view. And one thing you learn is everybody tends to move together. And then goes, and I think social media has made this even more intense.
I completely agree.
Everybody moves in the same direction. And I found, maybe just from being old or doing this for a long time, there's a time when you see like everybody's moving and price has moved. And then now, like, okay, now it's time to go the other way. And I think this market has become much more of a gambling institution. And you see everybody lined up on one way. And then, being a contrarian and going against consensus has become much more, I think, profitable. And particularly when the news flow is so intense. Like, it's been a pretty good trade. The market goes one way and you just fade it. Then it goes the other way and you fade it. And you realize you're staying on the line of a trend.
And I have to say, though, if basically the whole market is in one place, it is harder to make money that way because it's already in the price. Totally. And so where are you going to be there? There are probably some times where you have gone through, dotted your I's, crossed your T's, and still ended up not having the trade work out. Maybe the consensus was right for a reason. When you think through those experiences where it hasn't panned out, what comes to mind?
The ones where I didn't get it right come right to the fore. And and it's, because I think you learn much more from when you got things wrong. You tend to forget or hope that part of what you trained for your whole life, you're going to get more right than wrong, hopefully. But I remember, like with bonds, the coupon to maturity for something 20 years ago. It was early in my career. I was right out of school. And I figured I must be right on this. And I kept buying more. And it was an incredible lesson that, like, the world thinks I'm wrong. You got to get out, or you've got to reduce your size to the point that it doesn't ruin one security, ruin your whole career. But that was lesson one. That was like, you got to manage your risk. You got to manage your size. And then, it's a small industry and everybody gets a sense you're in a bad spot. Not a good place to be. Not a good place. And it's a pretty vicious industry. Like when people think you're on the wrong side.
Sort of taste the blood in the water.
Oh my God. And they can press you. But I'll remember Peloton.
Yeah.
I was one of the original owners of it. I remember it was more personal. And I got in, it was incredible, and I watched the technology, and then COVID hit, which was a fortunate situation for it. And then the thing exploded to the upside. And then, you get more bought into the ecosystem, and it's one of those things, like it's very hard when you think like you had the right perspective on it, and then all of a sudden it starts to go the other way. And there are a lot of people who say why it went the other way. Listen, I think there were a few things that I learned during that in terms of how do you manage cash flow. You grow too fast. People say it was COVID, maybe there's a little bit of that, but stop loss is a pretty healthy thing to do. And, you hold your conviction. I really believe in this, that I have this theory that you believe 3 out of 4 times, you're right, and then, okay, time to move on. But, this industry, one situation can hurt you in such an extreme way that I believe in this, particularly on the bond side. Diversify, make sure you've got liquid assets. Get it right 60, 65, 60% of the time. In illiquid, you got it right 70% of the time. On the fixed income, like I really feel like doing it more times than not. Just do it like a casino.
Yeah,
Tilt the
law
odds
of large
in your favor,
numbers.
but in equities, and the reason why I remember the big ones were in equities, is you can have explosive wins and losses. And those are the ones you got to be really thoughtful about. You got to cultivate the ones that you're winning on, and the ones that you're wrong. Like make sure you're just scaled to the size that you can absorb.
Let me push you on that a little bit more, because you did talk about the price trajectory for Peloton, and there was a time where it was exploding.
Incredible.
And you said you held on to it. So I manage a whole team of analysts. I'm an economist by training, and one of the things I try to teach my team is that if you're on the buy side, there's a term for getting the analytics exactly right, but getting the timing wrong. It's called being wrong.
Right.
So for you with this Peloton trade, do you think it was that you were wrong, or do you think it was just timing?
I mean, I quite frankly thought the company could have reversed course, could have changed course. They didn't. And I think they were slow to change course. And I will say one thing that I've learned more than anything else, particularly with equities, coming from a credit background, you look at cash flow, interest coverage, collateral, hard asset coverage, and you think about all the metrics. And with companies, you think about their business model, how they generate cash flow. But the one thing that I learned is the person running your company is a huge deal. Not just the person, but the team that runs a company, because invariably companies evolve, the industry evolves, technology evolves, and you got to pivot. Some of the most successful companies, I would say most of them, started as something very different. And then they pivoted to something, and they got into a thick vein of opportunity, whereas they probably started in something that was a good idea at the time, but then they had to change. Now I spend more time with CEOs and getting a feel for, do they know the numbers? Do they know the business? Are they good operators? And that to me is like the whole gig.
So getting into those levels of details, though, does it help you differentiate between possibly pivoting to seize opportunities that exist? That seems like a good thing. Another version of the world is somebody who can't stick with their core competencies and they're always chasing the next shiny object. What gives you the ability to sort of sift through the details to come up with that kind of distinction?
So, I would say a couple of things, particularly in technology. There are people who have the acuity to actually think about where's the world going, and then they adapt their business to that. And then there are people that, like you say, are all over the map. They're disorganized, or they're trying to do too many things or catch the hot trend, and they're behind it. But I've found there's some really unique people over time that I've studied who are just really good at finding, getting their companies positioned before the wave comes their way. There's some people who are tips of the waves, and they could talk at a high level, but it's the ones who are in the mess to understand what's going on and how do you adapt.
It sounds a little bit like some of what you were describing about your own process, where you said, I don't know if there's wisdom. I just try to get down to the details, build things up from the bottoms up, learn as much as possible. I think that skill set is actually pretty transferable across lots of different endeavors.
I think I'll tell you one thing I've just been terrible at my whole career, reading. There's so much analysis and research and so many smart things to read that if we divide and conquer, you take this, that I feel like that I got to read as much as I can. And I don't know, I do these monthly calls and I feel like we have a great team and we brainstorm, and then I got to get in a room and I got to think through it myself. Hopefully AI can just do it for me. But my guess is I'm still going to use AI to help me think through it all, but just me being able to absorb more faster.
Yeah, no, my strongly held forecast is that AI is going to serve all of that up to you, but you are still going to go
Still
through
have to.
everything
I think
and
so.
read it yourself. I think that's
I think so,
probably right.
but the decision-making process should be more efficient because you just bring
Absolutely.
I found that as humans, you can think on only so many planes. Like when I look at our portfolios and think about risk, if you can think multidimensionally and think about what technology allows you to do for stress testing, scenario analysis, putting different pieces together and portfolio, like that I think is going to be hugely valuable.
Yeah, help flag the areas where you really need to devote your
I think
attention
so.
and sort of leave the other things behind.
I think so.
So when we talked about being out of consensus, you said comes to mind right away all of the times where you've made some mistakes. And apparently you learn best right after having made a mistake. I always assumed when I was in elementary school and my mother would say that to me, it was to make me feel better and to sort of salvage my ego. But apparently it's science. Curious to hear from you when you think back over all of your career, which of those lessons were the hardest lessons?
I mean, the financial crisis was, I think, 1, 2, and 3 for me. And because I had started a hedge fund, because when you think about the financial assets, when everything correlates to one, we had some leverage on it. And then all of a sudden, like everything correlated to the downside. And
So
then
just to be
no
clear,
exit.
starting a hedge fund during the financial crisis.
Yeah, or a few months before, which I thought was actually a good time because things were becoming volatile, interesting, et cetera. I didn't anticipate the cavalcade of events that happened after that. And then we had a good business and things were going well. And then all of a sudden, like the world was disrupted in an incredibly, I think, surprising way, unexpected way in terms of what policy went, et cetera. But I'll never forget the stress that provided. There were some days I'd walk into the office and then we'd walk through a long causeway. And I remember I would walk in and say, this is going to be so hard. This is going to be so hard. And I try and pump myself up till I got to the door and it's still hard. And I'll never forget that. I mean, I'll just never forget that period. But I mean, like you say, it teaches you so much and how you think about it. And I will say to this day, thinking about liquidity, thinking about leverage, thinking about, you can write tail risk. And, people don't think you're ever going to hit that tail. But the way I think about, like, gosh, what if the incredibly unexpected happens is going to take me out? But like I said, I've had to fight my entire career to actually think through, okay, that's probably not going to happen again tomorrow. We got to be in the business of investing. We got to be in the business of generating return. We got to be in the business of taking risk. And so you got to think about, okay, what's my escape hatch? How do I think about exit strategy in virtually every asset or every position, every portfolio construction you have? And if you know what your exit strategy is, or you know what your escape hatch is, it helps you in terms of planning and thinking through, okay,
That makes a lot of
I
sense.
thought through this. Time to execute plan B. But that being said, we're in the risk business. I have to say, I like stress, not too much, but I like, I think anybody who's been in the investing business, you got to enjoy stress. Like I like getting to the airport, I don't have to get there 2.5 hours early. I think I thrive off of why would I waste time sitting in the airport? If you haven't missed a flight in your life, you're probably not taking enough risk.
There you go. I think your point about the crisis, maybe the extreme version of risk, seeing exactly just how wrong things can go. It's often attributed, I guess, to Churchill. War plans are useless, but war planning is critical. And I sort of feel like that's every day.
Totally. And you realize in the investment business, so much of what drives valuation is emotion. And markets go down 5 times faster than they go up. People tend to make money slowly and they lose it quickly. I mean, you watch that play out in certain commodities recently. Like you make money slowly and it's like going up and then bam. Yeah. And you're going to have that experience where all of a sudden there's a piece of news or something that came out and like your thesis, your structural positioning just got disrupted.
Yeah.
It's as much anticipating what people will think as much as it is, I think that asset makes sense or not. It's like, well, how will people interpret that asset 2 months, 3 months hence? That is a little bit of psychology added to it, which I wasn't any good at in school, but I've learned a little bit about it in the investment side.
Well, Rick, this has been great. I really appreciate your time.
Thanks for having me. It's interesting, fun.
Appreciate it.
You've been watching Hard Lessons, an original series from Morgan Stanley. You can listen to an extended audio version of this episode on Apple, Spotify, or wherever you get your podcasts. For more information about the series, visit morganstanley.com/hardlessons.